everyone. Welcome to the Trading Zone. I'm Joe Teague of Equity Armor Investments, and with me is Brian Stutland. Brian, how's it going?
Good. Hey, Joe. How you doing? Yeah, markets are busy. We're getting closer and closer maybe to a tax bill deal here for the government and for the United States. Revamped. It looks like the Senate is getting closer to try and pass something, although rumor has it they've got to read a 960-page document out loud to everybody in order for that to happen. So we'll see what goes on here. But when we're looking at VIX and volatility, kind of interesting, right? Markets making new highs, but the VIX really not as low as it normally should be given this rally. What do you think, Joe?
Yeah, let's take a look at that. We've seen the VIX go up and down all around so far this year. You got the VIX, or the mid 17s right now. If we can bring up our chart looking at the VIX, and it's been up and down all around. This is something we look at every week. This is crucial to understand. Of course, it's kind of like a snapshot of where we are right now, and it's kind of how it's kind of like it's not necessarily like a pure signal, but it's kind of a signal of how investors are thinking about the market. When things are looking really green, really rosy, you see the VIX really low. When people are extremely concerned and worried, we see the VIX very high. This is what we looked at the past couple of years. I actually wanted to look at something a little bit closer, Brian. This will be interesting. For today, I want to, now that today's basically the last day of the quarter, I wanted to look at the VIX year to date, and we have seen a lot of events so far this year, and the VIX has moved very differently for different events. We started off the year, we had market kind of soft, kind of sour. People are maybe questioning the AI trade, and then we got hit with right off the get-go this DeepSeek AI news, and the market was really concerned. Is China catching up? Does this mean all this infrastructure spending is not going to happen? Can you do this cheaper? Yada, yada, yada. The market kind of recovered from that, and then we started worrying about these tariffs that were coming around the corner. Boy, that was going to be a big outlook, but a big scary look. But it's interesting in this, late February, early March vol pop. It was higher than the recent vol pops, if you remember. That went up to the mid to high 20s on that little riff. Then, of course, we had Liberation Day and the announcement of these massive tariffs that were coming on, and the market had a huge vol pop, Brian. So what do you think was different then on that vol pop to these other vol pops?
Well, I think when you're looking at Liberation Day, the expectations of what the tariffs were going to be was a lot more than what people probably expected, and that really kind of shocked the market, I think. And so that's why you saw the VIX spike into the 50s versus some of these other event-driven kind of things. Really were more muted VIX. Interesting that none of those other areas had the VIX spike like up into the 30s and stay there for a little bit. I would have expected that a few times at least to have some ramifications on the economy, but clearly all these events were, if you look at the news that followed, it wasn't more than a couple weeks before the Trump administration either changed course and said mercy, or the other side, the other counterparty to the risk of whatever was going to take place. What's that?
The taco trade hit.
Yeah. So quickly there's some sort of event that happens right after that says, whoa, we can't handle this kind of level of volatility in the marketplace, and it reverses. But it is interesting. You mark all these points. I love this chart because you can see how, we talk about VIX as an asset class all the time and owning it as an asset class, which you look at this chart, the VIX kind of goes back to its mean reversion, but it's very tradable, very tradable. Like if you look at all these events, when you get these news shocks, you can get long or short the VIX and probably make some money in between those days. So that's something that we're always watching.
Yeah, and these headlines, Brian, are scary. People are thinking about them. They're concerning to a lot of people.
Yeah.
But that mean reversion is really crucial for people to understand. If they're not really like experts in the VIX, you don't have to be. But if you can just kind of look at these charts and kind of see when you get these extremes, that's what we're talking about, where it's very actionable for people to say, hey, wait a second, something's a little bit off here. And the mean reversion is kind of like, consider the markets like a rubber band. When it's kind of neutral, nothing will really happen. But if you stretch that rubber band, you should expect that to snap back to the neutral spot. So when you get these extreme events like the Liberation Day, you should expect it to come back The reverse is true. When the VIX is very low, it's kind of being pulled lower, and you should expect it to snap back to the average, which, I think right now we're kind of in that average spot, Brian. I would expect to see the 17-22 area. That's kind of like where we should expect to see the VIX living for the time period. When we see it elevated above like 22, maybe up closer to 25, it's really snapped. It's ready to snap back lower to the downside. See it below 17. I think the reverse is true.
Yeah, but I do think when you look at the mean, right, is when it is relatively low, I'm looking for a negative news event to take place, and that is a good spot to maybe get long the VIX. Vice versa, if there has been some negativity in the market, I'm looking for an event to come out that says that dissipates the level of volatility and tries to normalize the market again, and that's an area to get short the VIX. So
yeah, and you can almost visualize that here in this area here. You had like sustained higher volatility, and it was just kind of slowly going higher, and the market for its part was going lower with it right here. So you can kind of see how that is, and obviously this is a very steep spike. You saw a really sharp decline and then a really sharp rally after that. In this area here, you had sustained like lower volatility, and it kept on going lower and lower in the market, doing very well during this period. So I think that's another way to think of it too. When you get the momentum kind of one way, especially the downside, you really see that market doing great. In this area, it's kind of like a very cautious sign. Hey, the volatility is remaining elevated here, not coming lower. What should I be thinking? You should be very cautious during these periods.
yeah, for sure. Love this chart, though. I think it's a great way to just kind of visualize how the VIX
We're going to bring this back up and continue to fill it out through the rest of the year, because this year ain't over yet.
No, it's not.
And by the way, all these things, we're not going to see these things ever again in our lifetimes, but we're going to have similar events, similar headlines, which are going to get people concerned or get people excited. And it's never as bad as it is, never as good as it seems. So just need to remember that the headlines aren't going to tell the story. The charts are going to tell us what we need to know.
Yeah, well, I think when we turn here, we look at the skew. We always talk about this, how are puts shaping up relative to the value of a call on a relative basis. Obviously, when this skew is very high, puts are bid up. There's a lot of fear, anxiety in the market. We are seeing, I think you draw this green line here, this trend line that's been slowly moving higher with higher lows, and the support level right here. So this seems to be, we're in an area where we have seen institutional put buying occur, and the call buying sort of dissipates for people saying, well, maybe the rally is a little bit long in the tooth here, especially seeing these like higher lows that are
yeah, we'll get into some index charts to look at that too, but no question about it, the VIX or skew here is certainly on the lower end of its range. Remember, this measures the difference in prices between the 25 delta put in the S&P 500, 25 delta call in the S&P 500. So whenever these puts are relatively cheap, historically speaking, sometimes as a contrarian, we can look at this and say volatility is on the low end of the range. Maybe volatility needs to pick back up again. Just like the VIX itself, this is also mean reverting. So this is something we can see. Maybe we're on the lower end of the range, or maybe we got a little bit further down to go before it turns around. We're ready for all outcomes. Here in the VIX futures curve, we have low volatility right now, Brian.
Yeah, we do. It really, you can see successive drops here. If there is any mean reversion, if you look like maybe a month or a week out, somewhere in that 19 to 21 range is where VIX futures could pop to, I think, if we get some sort of event news that maybe disappoints the market. So that's something to watch out for. Do we see 25, 26 VIX right away? No, probably not, because we are on this downtrend. It would take a pretty significant event for that probably to happen. But could we get a pullback and a pop? Yeah, something in the low 20 range, sure.
Yeah, I mean, it's going to take. But what happened in the Liberation Day? People were expecting extreme tariffs that brought some liquidity out of the market. Extreme rush to cash. There was a dry up in liquidity all around. So it's going to take something like that to see a VIX popping out of the range, because we saw really, really dangerous headlines. Of course, 2 weeks ago, did not get that VIX high 30s at all. So their liquidity did not come out of the system at all during that. If anything, there were areas of the market people were very anxious to get into, given those new headlines. So it's interesting to watch it all play out. Again, the VIX is on the lower end of the range. We're in the summer months. We usually see low volatility during these time periods. Might be a time to look at getting long the market and look at being long volatility. Sent a trade out last week, Brian, which did just that on Friday to our Trading Zone subscribers. We got a trade coming up at the end of the show. Stick around to that. We'll be trading an NVIDIA trade. NVIDIA breaking out. How am I looking at buying it? Given that it's already just had this breakout, I got an idea for that if you stick around to the end of this show.
Yeah, that'll be something for us to talk about for sure. The semiconductor is obviously doing very, very strong right now. So can't wait to see that trade.
Yeah, and last week, if you watched our show, it was just like in the middle of like the fog of war, like literally, where we just recently had an attack on a U.S. base. We didn't know what was going to happen next. Then it came out, okay, it's just going to be a peace deal. This was like a token attack to save face, apparently, and we can all go back to normal. Markets are really treating it like that, and the peace has held for the time being. We're hopeful it will continue to hold and the market continue to move forward. And yeah, everything has been upbeat like since then. It's just been great news. Oil down, stocks higher, everybody seemingly super duper happy.
Yeah, obviously the rally continued, but it is interesting that the dollar continues to fall a little bit, which is maybe concerning for equity asset classes relative to holding those in dollar format. Obviously it's probably a positive for something like a Bitcoin cryptocurrencies right now as an alternative currency to hold if that trend continues to see and take place.
Yeah, but in the middle of that, it's kind of just economic strength still. Yeah, we had kind of a soft GDP first quarter. That said, we're still seeing some economic strength. We're still seeing some investment specifically in the AI arenas of the world. We're still seeing a lot of spending going on by the Mag 7. Really interesting to see. And we're going to get the budget. Yeah, maybe they're going to read it out through the Senate. I think the goal is by the 4th of July. Remember, the 4th of July will be this Friday, holiday shortened week again. Packed week, though. We're going to have the jobs report coming out on Thursday, Brian, not on Friday because of the holiday. So it's going to be a really busy week of trading. So another reason why volatility is suppressed this week, because we have the holiday coming on Friday. That said, it should be already taken out of the model, but it just still seems like traders suppress vol anyways. I mean, maybe people take time off during this period, during holidays anyway. So there's logic behind that.
Yeah, and just last week we talked about the tax bill. I think maybe people are underestimating a little bit for the economic stimulus, although the markets are kind of reacting positive to the upside. But the SALT cap, raising that up to, let's say, 40,000 or something like that versus, that's a lot of money coming into the system of tax dollars that are kept in investors' pockets, and that money's got to go somewhere and get invested somehow. So that's kind of a positive for the market if you're looking for something. But obviously on the other flip side is the Elon Musk side of it, is that the government just continues to spend, and that's probably why we're seeing the dollar continue to weaken.
Yeah, we talked about one of those bullet points in the volatility was the downgrade of the debt. We were thinking that maybe the government would spend a little less. That didn't last very long. We were kind of all expecting the deficits to be there and the spending to be there. So again, if it's in the right.
As they say in trading places, turn those machines back on, right? keep printing the money.
But I think with the productivity that's coming with the AI revolution, some deficit spending is going to be just fine. I think we're going to be able to grow some of this spending, but I'm hopeful the spending goes in the right space. I want to see investments in some technologies areas. A little concerning, some of the technology spending is not there, but again, we'll have to wait and see. I'm not going to sit around and listen to all 900 pages be read, but hopefully the spending is in the right spot. Hopefully where it's not spent, hopefully the private sector can do it, which they usually do. Of course, we're also waiting on some big trade deals. We probably will get some this week. and hopefully that will be another reason for a rally. And of course, we got interest rates. It's going to be very sensitive to what the jobs report is naturally, but we're kind of in line that we're pretty likely to get at least one cut by September, Brian, maybe 2 cuts by September, but probably one by September. I think the market will be just fine with that. If they can maybe cut once or twice in 2025, I think the growth stocks will be more than happy with that.
Yeah. So if we're looking ahead at the market, Joe, what are you seeing on the technicals here in the S&P? It just looks like up and away. But is there any concern about this rally, or is the momentum still there for you?
The momentum absolutely is still there, just absolutely racing through this all-time high area. It would have been natural to pause here, maybe pull back, do a little, cup and handle or something, but we basically just raced through. Maybe from here it would be natural to, turn around and test that area or just continue higher. It just seems like we're melting up. Everything is looking good, but just because things are looking good doesn't mean it's going to stay that way. I need to see it in the leadership. And leadership for me is going to be the Mag 7, Brian. NASDAQ highlighted here. Of course, they're more concentrated in the Mag 7. Big component of the Mag 7, obviously, NVIDIA. We're going to be talking about that. The semiconductors just absolutely looking brilliant. But I wanted to just look real quickly at the Mag 7 index here, Brian. I brought this chart up here. We're not at an all-time high here for the Mag 7. Some laggards here, Apple, Tesla, not doing as well as the rest of the indexes. So pretty interesting here. Kind of brought this chart out a little bit. We actually, had a fantastic run up in 23 through the 24. We actually had a pretty sizable pullback last summer in the Mag 7. So just want to keep that in mind. Not reach an all-time high here in the Mag 7. Maybe this is a spot where I think the market might be targeting here. Mag 7 coming up here in the Mag 7 index, and then maybe do something like that. I think that would be kind of healthy to do. So looking for that. Of course, we did that trade on Meta. Meta has been one of the best in the Mag 7, just kind of leading the way here. But this really looks like the Mag 7 itself here. So yeah, we're watching this very closely. I think it's almost like a better sentiment for market right now is the Mag 7 than the S&P 500 right now, because I think the AI trade is so crucial to everything.
Yeah, it is crucial, and I like how you point this out, because maybe the Mag 7 index hits that test that sort of all-time high, versus the S&P is sort of broken and NASDAQ broken through all-time highs. And if there's some sort of resistance, that might give the broader base index a reason to sort of pull back and retest the previous highs that it moved through before it can go forward and break out. I think right here, I'd probably want to be long a call to see if this breakout just lasts longer and the momentum continues in the broader market, and maybe gamma traded, as us option traders like to talk about, meaning that as the call moves more and more in the money, your exposure to the market becomes closer to 100%, like you're going to exercise the call. And at that point, I could then sell a further out of the money call. I could roll that call up to a higher strike and sort of take some profit there, because I collect income by selling out the previous call and buying a new higher strike call at a lower price. So this becomes a pretty good tradable market back and forth. At some point, I think the previous high in the NASDAQ and S&P gets sort of retested and a pullback occurs, maybe a small little volatility blip like we talked about, where the VIX pops back in low 20s could occur. So I want to trade this with momentum. I want to own some sort of upside call to do that.
Yeah, 100%. I'm kind of excited about that, kind of teasing our trade of the week here for sure, Brian. I have a good idea what to do here. Just real quickly, been following oil closely. Huge spike, huge pullback, kind of in the area we've been most of the year. Maybe this area was too low. This area was too high, but this is kind of where oil has been living all year, in this area. So we'll see if we can continue lower. That'd be great. Staying in this area is fine too. I think the market's not really having any issues with oil in the $65 range.
Yeah, I mean, we are halfway through the driving season, right? So the back half of the year, oil typically doesn't do as well. But so it's question, do we get back down to 60 or 63 or something like that in oil? Maybe. This is a tough. Normally, if I'm just looking at this chart, I'm saying I want to be a buyer because we're kind of in the low end of this range, outside of the too low and too high area. But given the fact that we're going to be getting closer and closer to seasonality of oil not performing as well, I would be a little tentative about actually buying it here.
Yeah, 100%. I just kind of seems like this is fair. It could go lower with increased supply, maybe tariffs or restraints lifted from Iran. Could go higher if there's more conflict. I think that's the most obvious commentary ever. But we're in like kind of a neutral spot here, so kind of watching it. But it's a good spot for the market. 65 is not really going to be harming the economy too much. It's been in this area for a while. If anything, it's like a positive spot for economic activity. Bottom line is okay. Let's move it on to the trade of the week here, Brian. Got NVIDIA. It is leading the market higher, raced to new all-time highs. It brought the market to new all-time highs. It is the most important component of the AI trade, especially the hardware component of the AI trade. This whole AI infrastructure build-out is being led by NVIDIA and their AI chips. For me, watching this breakout, thrilled that we own it in the fund, obviously. Thrilled that we own it for our clients. I question if I want to buy it today, right now, as a new position on this breakout. But I have an idea on how to do that while we're seeing this breakout. If it does pull back, that'll be fine. I'm still a long-term bull. So I'm in a trade that's going to take advantage of that. And I also want to be able to get exposure to the upside without paying too much. So bottom line, really bullish for the fourth quarter. That's what my trade is designed to look at, looking at the fourth quarter. So how am I doing that, Brian? I am buying the at-the-money calls in September, which is the 155 strike. I'm selling the December 170 call, and I'm also selling a December downside put spread. It's going to let me basically collect around $4 to be in this trade. I'm going to buy the stock, buy NVIDIA if it goes lower, because I'm happy to own it below 140, which right now we're at 156 and a half, 157. Happy to own it down at 140. Obviously, 10% drop. I would want to own it. Now I own it here, right here with this long call, and I'm in it for the next 10% to the upside too. So I'm happy to participate for 10% to the upside, and then I'm going to be stopped out in December on that short call.
Yeah, I think what's interesting about this trade too is to keep in mind that because you're sort of selling a put spread, okay, yeah, it is sort of capped by the downside put that you're using to protect it, but in some degree it is almost like a cash covered trade where you don't have to outlay the amount of money to buy the stock that you normally would in order to do this trade. So what I like to do then is take that cash because I haven't bought the stock and I'm using optionality to participate to the upside here in NVIDIA. As I take that cash over that time and I keep it in a money market fund, let's say, or there's ETFs like BIL or SHV that are short-term treasuries paying interest at near the Fed funds rate. And so if you consider that over the next 3 months, let's say, for this trade, you're collecting interest. So that's maybe a couple bucks more actually that you're bringing income in on top of the $4 you collected. So combine that, you're, let's say, making $6-7 collecting on this trade, plus you can get the $15 upside exposure here. This is a way to maybe make, about 15% return on your money in a short period of time on a trade where you have no risk from 155 down to that 140 strike, which is below the previous all-time high of NVIDIA. And I think there'll be some support there.
Yeah, I'd love to see support there. I'm just happy. Yeah, I'm happy, of course, to be buying it down here. There's no question about that. We have just raced higher here. It almost seems like the reverse of like catching a falling knife when to buy it. Like, and this is kind of like, do I add to NVIDIA here? Do I buy NVIDIA up here? Well, yeah, I mean, if you go back in time and look at like the stock market, it usually goes higher. Look at the biggest names in the stock market, it usually goes higher. So is this a good time to buy NVIDIA? Probably. Is it better to buy NVIDIA lower? Yes, absolutely. So I think I like this fashion of being in NVIDIA. I'm going to be in NVIDIA if there is a rally. I am going to buy NVIDIA if it does fall back. If we actually stick between 155 and 140, that's actually almost even the best case scenario. I get to collect my premium and then do it again, or just buy NVIDIA lower after collecting $4 on the straight too.
And this is also a way you see so many ETFs out there that are like defined risk kind of ETFs or structured notes that maybe an investment advisor put you in. I actually kind of like this trade. You can create this optionality yourself and imagine all the expenses downstream that a bank or ETFs or whatever like charge to try and get this to be put on. To me, on a risk reward, this is the best value for your money. So this is why it's important to learn these kind of trades, these sort of defined risk, call spread, put spread, which we almost call like a risk reversal kind of trades, because you can find ways to do this and save a whole bunch in fees and whatnot to put it on. And so I do like this trade. I think, Joe, if you look here, right, you got the 140 strike. You said, I want to own it there. The 125 strike that you buy on the put downside would stop you out. So yeah, I like it because maybe there's risk all the way down to 110-ish from that drop, if we were to break through 125 to the downside. So I'm only risking $15, but I've collected for plus the interest on my cash because I haven't outlaid money. I'm really only risking 5% loss on this trade to the downside. This is why I love this trade. I'm only risking 5% to the downside if the market, NVIDIA, totally collapses. But I can make, 10, 15% here to the upside. So from a risk return, this is a great trade. I love it.
Yeah, you kind of put a hammer on that nail that you're talking about. You really targeted in there what you're really risking. What you're really risking is kind of like a stock replacement. You would be buying it up here at 156. So if you go all the way down to 125, yes, you are risking $15, but you would be risking $30 if you were to buy the stock here. So you're risking a lot less. So at $15, you got to subtract the $4 on the premium we collected. That's down to 11. Collect the $5 on the interest you're earning. So absolutely, it's a banger. It's much better. It's much better than being in the stock, no question. Especially after you saw this huge rip higher. Now, if we do go down to 130, if we do go down to 125, I'm happy to buy it because I'm going to expect to see it, sometime next year being up here, making another all-time high.
The other thing I like about it, just, to button it up, one last thing is, if you wanted to use some sort of leverage onto this trade, right, is if you were comfortable from, 155 down to, call it 120, right? If you're willing to lose $30, $35 there, then on this trade, you can only lose less than $10. Then you could almost do this 3x times, get the same sort of stock exposure value or risk, same risk as that you would owning the stock, but now you've got 3x to the upside. So now you're looking at like, $45 plus the interest for upside exposure in a short amount of time. So this is just,
in that case, you'd be just as good doing this trade if NVIDIA goes to 200 than owning the stock 1-to-1. So absolutely. So I like that. Great point. Thanks. I think that's going to do us for us today here, Brian. I just want to thank everybody for jumping in here. If you're new to the show, make sure, you say hi and everything. Make sure to check us out, equityarmorinvestments.com. Check out the Ripple Effect. This goes out every week. This is for free, talking about volatility, just basically what we talked about on the show, but a little more detailed here. If you wanted to look at that, feel free to check that out right now. It's at equityarmorinvestments.com on the Ripple Effect. Make sure to subscribe to that. If you want these trades, which go out every week, multiple times a week, we got the Meta one that went out on Friday, getting into Meta on a similar style trade which you did to NVIDIA. If you wanted the NVIDIA trade before the show happens, I will make sure to subscribe to the Trading Zone, which you can do in strategies here. So hope everybody has a great trading week. Have a great 4th of July. Brian, do you have anything else that I'm missing?
That's it. It's been a great show, Joe. Make sure everybody tune in every Monday at 10 a.m. Eastern. We go live just shortly after that and go walk you through these trades. Check out our subscriptions, as Joe said. We look forward to seeing you guys every Monday here. Check out our YouTube channel at Equity Armor, or follow Joe at Joe Tige on X, or myself at Brian Stutland on X. We post trades. We give other live ideas, lots of shows, lots of information to digest, but one that we like to just stay in touch with you. So we'll see you guys next Monday. This is Brian Stutland here at Equity Armor Investments with my colleague Joe Tige. Catch you next Monday, 10 a.m. Eastern. Happy trading.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.